Hey guys, I hope you all are doing good. If you're new to the channel, my name is Shaun and I'm an equities trader. And in this video, I wanted to talk to you guys about the mindset of trading. And in this video in particular, I'll be talking about the exits. How do you think clearly about your exits? Because I feel, or I actually know that a lot of traders learn trading and get good at trading or really have the information on trading and how to trade the markets properly, but they're just not able to implement that knowledge and extract the money from the markets on a consistent basis. And that's simply because the mindset isn't right. And uh, probably the mindset wouldn't be the right word for it. It's like they don't have the complete clarity about what are they exactly supposed to do. I mean, they haven't broken down their trading into multiple steps: 1, 2, 3, 4. When I see this, I need to do this, I need to do that. When I see that, so they haven't had that clarity on thoughts. So I do plan to do a series on this exact topic, basically trading mindset, and I'll be covering multiple things on it. So if you haven't subscribed to the channel already, consider subscribing to the channel, because that way you can get these videos updated on your feed, YouTube feed basically, and be the first one to actually watch it. And it's going to be a lot of valuable content, guys. So getting back to the main topic of the video. So in this video, I'll be talking about the mindset and how do you think about exiting your trades clearly, right? So just to give you a bit of backstory how this topic actually came about, and what I'm about to say next, it's the reason. And I really found out that a lot of traders, or people who are not even traders, they're just interested in the market basically. They think that when stocks are really moving, making big moves, or it could be applied to anything, right? It could be applied to Forex, it could be applied to crypto, it could be applied to stocks. But when a stock in particular, or any asset basically just moves up 100, 200, 300% in a matter of months, or 6, 7 months, or a year or something, people think that good trading is about catching these big moves, right? Which couldn't be further from the truth. And to give you a backstory, right? This was a few years back, and I was still uh, providing advertising services. That I had an agency, and I was basically still a freelancer, although I had a company, but I was still doing a lot of things myself. So I do consider myself as a freelancer back then. So I didn't had a lot of time to day trade the markets on a regular basis. So I was kind of, maybe like my 70% of my trading was still swing trading. So I was focusing on these sort of moves in the markets, right? And there was a particular evening, maybe on a weekend or something, and me and a few buddies of mine, we were just having some beers in the bar, and after we left that bar, we were just walking towards our cars. Actually, it's YouTube, so we were not walking towards our cars. We were walking towards a taxi, right? It's YouTube. Taxi is still a car. So anyways, we were just having a quick chat, having some smokes, and this one of my friend, he tells me like, did you see what Tesla did? So this person is not somebody who's actively involved in the markets, but just a lot of headlines, they were catching on to it, and they get to know like, okay, I trade. And they asked me like, hey, did you see what Tesla did? Did you actually trade Tesla? And I was like, yeah, I did trade Tesla. And at this point, I actually had learned my lesson that if somebody's not really involved in the markets, not to uh, you know indulge too much in the conversation, because what a trader does and what everybody else thinks as a trader, like what a trader does, is just completely day and night different basically. So like, yeah, I did trade Tesla, and at that time it was the AI hype was going on, and Nvidia was the new growth stock at the time, and I was just trading Nvidia. The point of the whole conversation was, because Tesla had made like hundreds of percentage of move in multiple months, and Nvidia was looking like it's going to be doing the same thing, they were assuming that trading is all about catching those big moves. And I also see a lot of developing traders get caught up into this one thing, that they would enter a trade, and you know, and maybe they would even trade it perfectly. They would just enter exactly as they're supposed to, as per their strategy. They manage the trades exactly as they're supposed to, and they exit, take profits at their targets, and they just see the stock actually just making a complete rip and moving like 3 times higher than initial profits basically, and they would just beat themselves up. They would think that they haven't traded the stock properly, and they would just keep watching and obsess over that one ticker that just went so much more higher than what they initially targeted and exited. And they would just keep watching that ticker enter again, or just chase the ticker and even enter the stock when it doesn't even meet their entry criteria or strategy basically after the first trade basically. So they would just keep chasing the stock, and then whatever money that they made in the very first trade, which was essentially a good trade that they took, they would lose it all and then some, right? So this is I wanted to clarify this because even when I was trading Tesla multiple times, I was trading Nvidia multiple times, I wasn't trying, or I didn't even know basically that it's going to do exactly what it did. But all I knew that it was a growth stock. It had good earnings on a consistent basis, year after year, quarter after quarter. And that was my strategy at that time. I was looking for just basically for swing trading. I was looking at more fundamental stuff and then combine that with technical analysis, and entry rules and entry patterns were there. Basically, I was looking for consolidation patterns with very specific rules. So if I see the consolidation pattern, I'm going to enter the trade long, and I would just target the next 20 to 25% of the move or the next resistance basically. So that's what I was actually trying to do, and I did that multiple times very successfully in Tesla, in Nvidia, and but the mistakes that I talked about just earlier, I used to be stuck in those same mistakes, and a lot of people actually think about those mistakes. So I've actually felt like, okay, I wasn't alone, the very first thing. But second thing is, most people think that this is what trading is, that you're trying to capture the entire move, whereas good trading is really about just targeting and aiming for singles. You simply want to trade your strategy, and that's it. Whatever your strategy says, you do exactly that. However your strategy is well defined, hopefully it has an edge, and you enter on a stop exactly as your strategy says, you manage your stock exactly as your strategy says, and you exit your trades exactly as your strategy says, as your rules say. It doesn't really matter that the stock didn't reach your target. In that case, like you get stopped out on a trailing stop loss or whatever trade management rules that you have. It doesn't matter if it goes maybe 10% higher or 100 or 1000% higher than your targets. That's it. Your job is to risk a small amount of capital that has an edge on a strategy that has an edge, and that's it, where you have a positive expectancy. And if you risk $100, your aim should be to target $200 or $300 as a risk reward of 1:2, 1:3, 1:5, whatever it is. You are not trying to squeeze every single penny from the market, because trying to do that, you will end up sabotaging a lot of these good moves that the market actually offers you, good opportunities that the market actually offers you, and you will be making so many mistakes, right, just along the way, that you give up most of your P&L plus your existing capital, on and on. Basically, it leads to a lot of mistakes. And I just want to reiterate the whole point again. Your job as a trader is not to capture the bigger move. Your job as a trader is to simply trade your strategy, enter as your strategy says, manage your trades as your strategy says, and exit your trades as your strategy says. That's it. It should have statistical probability of winning, and just a bit more reward compared to what you're risking. That's it. And to add one more thing on top of what we were discussing earlier, trying to look for these bigger moves on a regular basis, or trying to aim for these big moves, or getting pissed off, or if you've missed any particular really big moves, first and foremost, it's not the way to get rich in the markets anyways. So you can just sort of let that pressure off your shoulder go, right? This is not the right way, or this is not even the way that's going to make you rich or be able to trade the markets full time, if that's what you're looking to do. The realistic way, the only way to actually become a full-time trader and actually become financially independent as a trader is by trading consistently, trying to look for these singles where your risk reward is like 2, 3, or 5, and every now and again the market is going to give you good opportunities, and so on and so forth. But the whole job is, as a trader, is to keep trading consistently and gradually just sizing yourself up. Bigger traders are not doing anything different. They're simply trading bigger sizes. They're still making some mistakes that you might be doing, and with experience, those mistakes sort of just gradually go away. And but yeah, that's about it really, guys. It's just about consistency and gradually bumping yourself in terms of risk and size, and that's how you end up becoming a bigger trader yourself. And yeah, basically, yeah, so just stop blaming yourself or stop getting excited about if a stock does something and you haven't participated in the stock. And yeah, because that is not even the job as a trader. Your job is simply to have a strategy that has an edge and have a plan before you enter the trade. Have a plan about where you're going to exit, how you're going to manage your trade, and where are you going to exit. That's it. You keep doing that over and over and over again. It doesn't matter what the stock does after you exit it. If you've done exactly what you had planned before entering the market, if you've done exactly that, that's a good trade, and you want to keep doing that consistently on a day-to-day, daily basis, basically. So hope you found it helpful, insightful, and hope this video helps you having the right mindset towards your exits, because it's very easy to get excited about these what Tesla has done, what Nvidia has done, and what X company has done, but no professional trader is actually trying to look for these things, or no professional trader is trying to capture the entire move. They're just trying to make one good trade at a time and move on to the next one. Allocate that capital, one trade where the risk to reward is in their favor, the odds are in their favor, and that's it. They're just trying to do that as many times as possible, and over a period of time, they just sizing themselves up, and just, it just kind of grows their account, So anyways, that's about it for this video. Hopefully you guys found it useful, helpful, insightful. If you did, consider hitting the like button, and because it really does help the channel grow, and subscribe to see more videos just like this one. And I'll see you in the next one. Cheers, guys. Take it easy.